And we are live. This is Ryan Munn on Interchain Live, connecting to you from Vermont. I'm actually in Montpelier, Vermont today in the State House, sitting in the cafeteria before it gets too busy in here for lunchtime. And I'm talking today with Matthew Unger from iComply. He's the CEO. And we're going to hear a little bit about iComply today. Thanks for joining us, Matt. How you doing?
Thank you. Yeah, I'm doing good. We're out here in Vancouver, so we've got quite a bit of sunshine out today, and which is rare for a February in Vancouver. So it's great. Definitely, thank you for having me on the air here.
Awesome. Yeah. So we met like a year ago, back in February of 2018. And I met you down at one of the Bitcoin super conferences, and we've just kind of kept tabs on each other a little bit. And I'm really excited to hear about iComply, what you guys are doing. You've been going through some shifts and changes. And but before we get into that, tell me a little bit about your background, Matt, and what kind of brought you to your position here with iComply.
Oh man, what a journey. I started my career in finance. I was at the time the youngest broker financial advisor in Canada, and kind of decided to, what do they call it? Like, going uphill both ways in snow, kind of like that level of uphill battle to fight your way through building a career in financial services, especially in your early 20s. After about 4 years, I built a $42 million practice. I sold that to the largest wealth management firm in the country, and then spent actually 2 years contracting to their head office, working on enterprise technology, deliverable and supporting about 5,000 advisors across the country with technology and product deployments. The last 8 years, I've kind of moved onto my own, doing my own technology management consulting. I've done work for everything from BDC to Bank of Canada. I have secret level clearance with CSIS. Worked on some stuff for Virgin Group. It's been a very interesting ride to see where the new innovations in technology go. One of the areas that's always stayed true with a lot of the projects I'm working on is when I worked as a broker. I remember there was a time, and one time specifically, it was the largest deal of my entire career. And I was looking at closing this deal, and I'd opened an account for the client maybe 6 weeks earlier. But in between the 6 weeks of when I opened the client's account and when the client was ready to cut this huge check, and it was going to be the biggest deal I'd ever done, while this is going on, I didn't realize that the firm had updated the KYC form. So nothing had changed at all about the client situation, but the form number had now updated. And because we had an old form on file, the deal was needed to close before the end of the weekend, and yet it was a long weekend. The regional managers were already headed off to the lake, as happens on a Friday afternoon in financial services. And so this deal was basically dead in the water because we couldn't make a deadline over the weekend. And this is a problem that you see over and over again in financial services, where there's no material information wrong about the client, but they still have to fill out one more form. And it's so frustrating for the client. It's frustrating for the broker. Fast forwarding, watching things like BlackBerry and RIM and iPhones and things like this come out, I looked at my industry in finance and I was like, there's no way we can keep pressing hard through 4 copies of paper and expect to survive. And so that kind of led me down this path of technology management. And, it was 2014. I really started to see a lot of maturity with blockchain technology that started to get me very excited about it. And 2015, 2016, I had the honor of being able to work on a proof of concept at MIT, where we took an interest rate swap for a clearinghouse and essentially said, could we take about $12,000 of legal fees and tons of time, and could we boil that down into smart contract logic to be executed and fulfilled over something like a network like Ethereum? And we were able to prove that you could actually do that for under $1 and in under a minute. And so we, $12,000 of legal fees down to this. That is now the core of iComply's pre-facto technology. So iComply has been around since September 2017. We've got about 20 people on our team, amazing people from all sorts of different verticals of technology, finance, compliance. and different type aspects of business. And our focus as a company has been to reduce regulatory friction in capital markets using this technology. So we really we really find that if you look at what has happened in the cryptocurrency market, 2016, 2017 was an excellent proof of concept of a lot of high volume of real dollars flowing over blockchain securely, and then seeing many issues of corporate governance, of many issues of how people manage private keys, from how people manage their crowd sale wallets, right down to how people manage, the keys to an exchange like Quadriga,
Right.
we just saw, right? So there's been a
We got
lot
a learning process on the protocols.
yeah, and on protocols, but not protocols necessarily that are always technological, right? And we don't.
Right. Yeah, people
We
protocol.
have these are business procedures, and the thing is, in a financial institution, they're regulated and they have to report these procedures. When the Attorney General of New York asks the exchanges if they can disclose a bunch of information, a bunch of them tell them to screw off, right? So the cryptocurrency world has this issue where they've chosen they want to not have regulation in certain aspects of the market. We've seen this trend like we don't need any regulation, the free market is fine. But then we also see what happens when there's no accountability. People cut corners, and when you're trading people's money, it runs into problems. So I think with a lot of these things, if people had simply had clear regulatory guidelines, they could have actually operated properly. But in the absence of clear regulations, when people are skating in the gray area, they are setting a lot of the precedent themselves. And unfortunately, sometimes when you have bad actors setting precedent for an industry, like we saw with some of the early use cases of things like Bitcoin, it was associated with money laundering, with buying illegal things that were illegal, with hiring hitmen. Like this is what the initial thoughts, and that still gets brought into the cryptocurrency market and then gets brought into the blockchain market. So what we've also seen while all of this is going on in the cryptocurrency side, and now the prices of cryptocurrency have dropped so much, we've also seen that in the banking market, the banks are starting to adopt this technology. The Bank of Canada and the Central Bank of Singapore have been processing overnight remittances on Ethereum for 13, 14 months.
Yeah.
We see JP Morgan, what they just announced by having an internal blockchain, is a good announcement. I don't think it's much different than what we knew about them in the before the announcement, but they're using blockchain internally, and we see more and more of this happening around the world. Luxembourg is the world's largest fund jurisdiction, second largest fund jurisdiction, second only to the US. And they have now recognized digital securities are securities. You can use your fund units, you can use your equity, you can use it to process debt. So it's very powerful to see the institutional adoption of blockchain, and I think we're going to see a lot more. And that's really our focus as a company, is to say, if we can take the business processes and the technology stack for KYC and identity for verifying people and corporations, and if we can build out those workflows in a very streamlined and low-cost manner, essentially as a microservices online, you can then verify a corporation via an API. You can verify an individual via an API. You can screen for blockchain forensics. You can do all of these different pieces, but then we also built our Prefacto product, which
now, are you
kind of end-to-end. Sorry.
Yeah, well, I was just to say, are you then providing these chain analytics services as well? So some of the forensic processes that are available out there, I won't mention maybe your competitors that are out there that are fairly well known for doing analysis of the blockchain. Is that a type of service that you're providing as well to your clients?
Yeah, so yes and no. There's a line between what we do, and you mentioned some of these other players in the blockchain forensics and more like the analytics and the search type of enhanced due diligence tools.
Yeah.
What's different between something like a blockchain forensics tool that would be selling to a regulator is that they have typically think of it as a blockchain explorer. typically,
Right.
and it's usually a fairly enhanced, maybe enterprise grade. Maybe there's a lot of case management features built into it, but at the end of the day, here's a block. They can append data. They can say this block is owned by Quadriga. They sent money to this address. Well, that happens to be a wallet on this exchange, and so they can map the blockchain. The problem with those tools is that they're all siloed into themselves. So the data, the data is limited basically to their customer base, and it's actually typically siloed by customer, because some of the agencies don't necessarily want to share data across the entire network.
Right.
What we've focused on doing was we've actually focused on integrating different. So some of the major vendors in the space are partners of ours. So we do consume the data that they have as proprietary data, but we also integrate with open source networks and data sets, so that we have a much more comprehensive look. We cover 5 different blockchains, focusing on the ones with the highest transaction volumes. But what happens with our system is you identify, is there a flag or is there not a flag? So while you're going through the KYC screening, you're also screening the individual's wallet address, their funds, to see where did this Bitcoin come from, where did this Ethereum come from, where did this token come from. And once you've identified that there's some risk, let's say that this wallet address is linked to a Quadriga wallet or a Mt. Gox wallet, that would then create a flag in our system that would reference, this is, a known Mt. Gox address, essentially. And that type of a flag, you could then decide, do you want to dig deeper? And that's where you might use these other forensics tools. But what we find is our clients, cryptocurrency exchanges, people who are issuing tokens using our Prefacto product, which we can get into a little bit later. In these applications here, the focus is really to make it streamlined and easy, so that these manual blockchain analytics searching tools, you're maybe using them 5% of the time of what you would have had to use them before. Most of the exchanges and the issuers we talk to that actually do proper blockchain AML, we find that they only find issues very, very rarely, if ever, because most of the time, if somebody is a bad actor and they know that you do blockchain forensics, they're not going to bring their Bitcoin to your website.
Right.
So they tend to be somewhat self-selective. Once people know that that's what they're screening for, they don't see a lot of hits when they use these tools as it is, but they use these tools to basically, CYA, cover your ass, is the first rule with compliance, is make sure that you've done everything properly and that you've documented everything you've done.
Right.
And so they use these tools out of a process, but it may not, just because that's what we did with fiat compliance when it was paper money and paper securities, doesn't mean that we need to manage compliance the same way in a digital finance world.
Sure. Now share with us a little bit about your team. Now these are your advisors that I'm looking at here. Do you have your founding team listed here as well?
Yeah, we have our team on the website as well. Our advisors are, Jeff Banman has been, it was a huge help to us. He was a former regulator at the CFTC, advised the last 3 CFTC chairmen, and actually built the FinLab at CFTC, which is very cool. Thomas Linder is the lawyer behind Ethereum, is what he's known for most. Manny Alejandro is the former chief compliance officer of NASDAQ, and worked at JP Morgan and a number of other firms. We've got our advisors have been a tremendous support as far as a mind trust, as far as building things. People like Mike Stevens, who's people know for things like CryptoKitties. They know him for some of his works with like TIO Networks and PayPal, and then Andrew Chinger was one of the people behind the FIDO protocol, which is how we actually manage identity since the internet. So we've got a very powerful team. Praveen Mandel leads an AI and machine learning innovation company for enterprises. So we have a lot of experience within our team and our advisors to draw on. I think on our website there's also a list of our team as well. And with the maybe we might have missed We did some changing on the website.
We just updated this. I know, I was looking at it earlier.
I can get the highlights on our team. We've got such an amazing team. Our CTO Matt Massiar is formerly was managing an environment of 34 billion transactions a day. It's actually the world's third largest instance of .NET. So there's the NSA, the Hadron Collider, and the environment that he was leading. So there's a lot of depth there. My co-founder Q, or Kayum, but everyone calls him Q, like James Bond style. But if you or Star Trek, his background is financial services as well. So similar to me, he worked in the processing. He's a CFA level 3 candidate and worked in the processing side of putting a lot of the transactions together for hedge fund trades for one of the largest trading firms in Canada. So we've sat in the back offices, we've pushed the paperwork, and we felt the pain. On the compliance side, I think Greg Pin is an absolute powerhouse. He built and ran WorldCheck, which is the #1 KYC AML tool in financial services. I think they have over global in tier 1 banks, like over 90% market share. As Thomson Reuters most profitable company for many years. So the power of having that type of a background in KYC AML has really helped our product to mature in its ability to serve the market. And I see you found it looks like we didn't migrate things over there. Peter Piasecki did his master's thesis in Bitcoin. You can find him online on Reddit at he's very well known in the space. I mentioned Greg. Jeremy comes from the tax management, KPMG, MNP, that type of tax practice world. So our team has a very diverse background between finance, between technology, between blockchain, compliance. It's a weird blend. If you wanted to pick a topic that you could like put things together on, and it would be very complex for people, it would be when you merge compliance, finance, and technology. So it's quite it
crosses industries. It completely crosses all industries and sectors, because everybody actually has very similar data compliance and security challenges.
Absolutely. And the frustrating part is that these people just have such a if you're in the tech world, people's eyes gloss over when it comes to finance or when it comes to compliance. When you're in finance, your eyes definitely glaze over when you have to hear about compliance, and often about technology. And so, these are not worlds that necessarily naturally come together. But the team that we've built has, one of the things that I love about our team is how much we actually love to work together. We have so much fun together. It's more of a family than it is like, okay, I'm showing up for work. And it's, it's cool to see that type of an environment where everybody's, our mission as a company is to enable that global transition of wealth from traditional, completely opaque financial markets into a transparent and decentralized financial market. And the only way we can do that is by meeting them in the middle with the compliance piece. And if we can do that, we can assets can very easily flow over, and naturally they will, because capital always flows where there's less friction. And you can't look at the cryptocurrency market and see the level of efficiency and the scale of that's been trading and not understand how much this is going to impact friction at first. In the next 3 to 5 years, it's going to be the private debt, the private equity, the real estate, right?
Yeah.
Let's
pause there for a second. Let's pick. So you guys have done some of these projects. So is there one that's already kind of done and passed that we can get into some of the details on?
There's a couple different projects that we can talk. We haven't. I haven't asked them specifically if I can use their name, but they're a very cool company. They're actually one of the world's top 10 whiskey manufacturers, so it gives you a bit of a clue. But it's a family-run distillery, and if you think about them being able to access capital as a business model, VCs want to hear. Last 2 years ago, they wanted to hear cryptocurrency. Now they want to hear cannabis or AI. Now, the investor cycles don't typically go, I'm going to, invest in a multi-generational family business and fund operational cost of producing multiple vintages of luxury whiskey. And then the other aspect of their business is in the alcohol industry as a whole, there's this whole global monopoly on the supply chain, right? And yet when you have a brand that's so well recognized, everybody's coming to that supply chain for your brand, but you're paying for it, right? And so instead of what they did is they actually issued a security token, and it's a futures contract. If you own one token, it's worth one bottle of whiskey. And when the whiskey is ready, you can choose to either redeem your token, or if you don't exercise your first rights of refusal within a window of time, then they sell the bottles on the market and you share in the profits. So it's literally a whiskey futures contract. It's really, really cool.
That's really awesome. So now, that's something where, a connoisseur, you can cross an investor with a connoisseur with just someone that likes a brand. And you create your consumer base from your investors, but you also create your advocacy base, almost a marketing base from your investors.
Well, and that's I think one of the most powerful things of this technology that we've seen, especially in the early days of blockchain, before we got into the smart contract layers. There was so much tribalism around the networks. The level of belief and ownership that people had when they simply put a few pennies into the Bitcoin network, right? It created a layer of intrinsic ownership and value that is, I am a Bitcoiner, or especially early on. And I think, imagine if, one of the largest companies in the world, Apple Computers, they have very much a luxury good. I own one. It's a pain in the ass sometimes, but we have these devices, and if I could directly engage, if I could own a token of equity of iComply, and that was not of iComply, of Apple, I would be able to then engage with, I could get special dividends that might be a coupon on the next phone. There's all sorts of different things that you could so easily do. Right now, Apple has no idea who their end shareholders are, because they're all held through layers and layers and layers of funds, right? So they have no way of directly engaging the market. So they have to pay for the whole marketing budget on the other side to access customers. And I think we're seeing a change, especially with how technology is democratizing different aspects of business. I think we're seeing this move where, at one point in time, you could be completely siloed between your customers and your investors, right? As a public company, and your investors, you talk to this, and they say, okay, like, go bleed the customers for as much money as possible, and you're going to do it because your shareholders say you have to. But I think the more that this is democratized, the more that we're going to see more and more people being more closely connected between a customer and an investor, especially in decentralized finance. You don't have access to the investment through your online trading account. You have to go seek out the company. You really have to believe what you're investing in, or be highly speculative in 2017. That was the other option.
Yeah. Well, and it's interesting too, because I kind of have a trick question, or to ask you to sort of maybe wrap this up a little bit. But there's all this talk about utility tokens versus securities, and at the end of the day, there's really nothing in securities law that specifies the medium on which a security is on. So in other words, it could be this this napkin over here, or it could even be this thing of salt, right? I could say this salt, if it's got a unique serial number on it, I can say this salt bottle actually represents 25% of my company. So if I sell you this salt bottle, you now have the physical holding that represents 25% of my company. So my trick question to you is, are or should airline miles be a security?
Have we ever seen an initial air miles offering?
We have not, but we do have people that are buying up the airline miles.
Absolutely. There's definitely a secondary market for them. People go to court in divorces with them, for sure. I think that the interesting thing about the Air Miles program is that it's still being they're still the book of record. They still maintain a centralized book of record. That being said, I don't know how much control they have over money laundering using air miles, right? And so it's, in the question of should something like air miles, the more decentralized it becomes, the more ownership I have, the more ability people need to know that this person that I'm engaging with isn't washing a bunch of stolen Bitcoin, isn't, like things like that. So it's an interesting, I think that we will tokenize everything. It's the cost of securitization will fall through the floor. What we charge for is comparative to what you would pay for an online software as a startup company. We don't charge like a security token platform. It's just software that you access to build. And I think that that's only the beginning. I think we're going to see Moore's law apply into this space. And as the cost continues to drive down, more legal templates, more legislative workflows that are documented and approved through court, court filings and procedures and hearings that have happened that form legislation. I think we're going to see this become more and more cost effective to the point where we'll securitize nearly anything. Like, what's going to be the barrier? Is it $100? Is it $1,000? But when that happens, we will need to somewhat regulate everything. Otherwise, everybody will be, securitizing ham sandwiches for $4 billion, and like we saw in 2016.
Well, to a certain extent, we do need to allow for the public learning curve, right? We need to allow for the realization that that ham sandwich is not worth $4 billion.
No matter who and what their experience is, I guess some people might pay that for a very nice, a well-made chef sandwich. I suppose there are those people in the world, but it's not a security nonetheless, and I think that there's the other aspect of the air miles piece is air miles, to my understanding, I think are still covered by consumer goods law. So the article of utility versus security isn't really, and I'm not a lawyer, so don't quote me on that, but I'm sure Wikipedia is more versed than I am on that. So the piece that I think that we really see is that if it's not a security, then what is it? Because you're much better off to actually skate within some sort of regulation than try to bushwhack through some area and hope that you don't cross boundaries, trying to avoid being a commodity. So you cross into the securitization or consumer goods world. I think it's much better to figure out what is the application of this token? What's the purpose of this token? Is this to, an electric car company out of the UK that's using our tech is creating one token for each car, and when you buy that car, it's just simply your certificate. It's like your deed or your title, and so totally different application than somebody who's raising capital.
Absolutely. Well, and the argument I try to get across many times is that this technology isn't necessarily meant to be the subject of regulation, but it's all of the tools of regulation. So it's really teaching our regulatory bodies, who are really in place to observe and inform the public, to be able to observe these technologies, how they're acting, make intelligent statements about them, and perhaps issue public service warnings or endorsements even on the underlying protocols that are implemented, that demonstrate that the technology and the people around the technology are following the appropriate protocols. And from there, it's consumer decision, or even the private business sector decision whether or not they're going to do business with this particular instance or implementation. So
absolutely.
We're gonna wrap this up here, but I really appreciate you on here.
Thank you for having me. This has been great.
Yeah. Let me ask you, if you can, give us one thing that you think people should be looking for, or that the public might want to encourage their state bodies or representatives or even influential local enterprises to be doing to really open the doors for what this technology can do for them.
Yeah, interesting. I think the biggest thing we need to do within engaging in the government right now is helping to educate them a little bit on the form versus function, which is what you spoke to earlier. Most people, their understanding of this technology, they heard about Bitcoin at some point in time, and this is quite, we're a decade into this technology now, and that's the level of understanding. And so I think it's important, what we see when we talk to regulators and monetary authorities is that everybody's throwing white papers at them or coming in to talk about something that they want to build one day. We came in and we actually demoed our software and walked through and talked about the considerations based on their understanding of how this could be used. And that was very helpful in us navigating the regulatory environments and finding out which environments would be good for us to work in initially, which ones would we want to adjust features in the product, things like that. So that was, from our private enterprise perspective, that is one of the ways that we engage that. But I think it is important for people to provide education and to their elected officials around, this is just another piece of technology. You don't update your, when you go to the bank, when I remember when I was like 6 years old, my parents said like, okay, you got to open a bank account, right? Got to open a savings account. And I remember they gave me this little book, and you had to like write it in. And then if you wrote your account balance properly and it was the right, then they would put a stamp next to it. And you think about this type of process. We don't do this. We don't even think about doing this. It doesn't even cross our mind anymore. It's going to be the same thing in probably as early as 5 years with blockchain. There's, a lot of people think it's going to take longer, but when you see the largest financial institutions quietly making these shifts, by the time we get to 5 years, blockchain will be, it's just like if you don't have a mobile app for your bank today, not even online, if your credit union or local branch doesn't have an app, people are like, really? And it'll be the same thing. If you're not using blockchain, people will just wonder, how can you afford to operate?
Absolutely.
Yeah.
Awesome. Well, I can't agree more, and that's a great point to wrap this up on. I really appreciate you joining us today, Matt. Thank you so much.
Thanks for having me. Good to see you again.
Keep up the good work, and for those of you out there, thanks for watching. Tune in for more. Subscribe and like, please. This is Ryan Munn with Entertain Live, and we've had Matthew Unger with iComply. Check out the websites, and we'll talk to you soon.
Take care.